Hi everyone. So today is a market update for April 29th. Let's get started. So pretty eventful day in the market and for a couple stocks. For MVIS Microvision, this stock has just, it's really nice how it's respected a lot of technical boundaries. If we kind of go on the weekly here and the monthly chart, and let's say we go back to 2009, and we can see, and even in 2007, this stock peaked, and there was a huge drawdown. And if we kind of draw a Fibonacci extension for here, we can see that it's really respected these Fib extensions, and you can and also the support lines as well. So you can kind of see it went here, and at this line it kind of got rejected twice. Then it traded lower. Today after hours, I believe it's trading around $14. So this was a major support line where it could keep around $17, and you can see a lot of support or resistance that turned into support here. Now it's at $14, but it is aftermarket. So although there was pretty good volume that had brought it down, after hours you can't really trust it so much because it's not, there's different market structures then. So tough to say where it will open tomorrow. If it kind of opens, below 17, really the next area of support is $11 or $10 around here. And it could easily trade there. It's funny. Somebody had said that they had 500,000 in sales, and somebody had made $50,000 profit on the stock, and somebody was like, "Oh, that's 10% of their sales you just made as profit trading the stock." So a lot of these stocks are kind of like that. People who make money off of them end up being, more profitable than the actual company whose shares it is. But that's the world we're living in. Yeah. So I would say, I would stay away from these stocks. But I mean, when they're coming like this, and you can kind of see that it breaks a trend, like you can see, okay, like this trend line. You could theoretically get involved here, like at $15. You could get involved because at this point, it's broken this main downward movement. It's above the 50-day moving average. Yeah. You have a pretty good stop limit, so you can kind of see, okay, well, if it goes lower, then I'll just get out of the trade, and then you can just ride it up, and whatever your risk tolerance is, you can go to the next fib level. Let's look at the 1 hour and see actually what happened here. So here it looks like it just went right through it. It didn't even care. So the day that this had been moving up, it had moved up, I don't know, quite a bit, like 36% in that one day. You can see that it just didn't even care. Like it just blasted through that. So pretty strong volume as well. Anyways, okay, let's move on to the next stock. I covered this on my Twitter page. It's called @Trading with Sina. So I had said that if you look here, okay, actually let's go on the weekly. So you can see CROX since 2007. Look at this base. All of this time, it hasn't gone anywhere since 2007. This stock has been doing nothing, and here you can see that it got here, and then it really consolidated here. And then they just had a blowout earnings, and that caused it to kind of go to the next fib extension here. Now, what I anticipate for this stock is that it may consolidate around here. It depends on how strong the buyers are. Or we could see that, the next fib extension would probably be 135 and then 155. So this is a great company. They are a 6 billion market cap, and their profit margins are just increasing. It's 22% profit margins. The revenue is 1.39, and they're making net income of 312 million. They have a clean balance sheet, no debt, and they actually increased their share buyback program to, I believe, $1 billion around. They increased it by 700 million-ish. So they're buying back their shares, even though it's at an all-time high, to kind of return value to their investors. And they're year over year, they're just growing and growing. And also they're all over social media. They got deals with like Justin Bieber and all that stuff. And you know how crazy social media can be. Anybody that, they'll pay these influencers, and really they can drive up sales because people like to listen to influencers for some reason. So anyways, okay, moving on to bonds. So it's funny. So this move in all these penny stocks like MVIS, BNGO and stuff, you kind of need to look at the bond market. I think a lot of it is due to the bond market. So if we can kind of see here, let's go to the 4 hour. Okay, so this guy, so this is when all of the penny stocks crash. I don't know if you remember, like all the SPACs, all of those stocks that people were making 400% a day, all this move in bonds, in the 30-year bond, which means the interest rates are rising. This move just wiped out all of those penny stock investors. And then we had kind of a relief rally where some people caught their breaths. Maybe we had like 20% moves in some of the penny stocks. And then now we've kind of come out of this channel. And if we go to the daily, we can kind of see this is a nice channel. And really it's moving lower. And even if we go to the 10-year yield, same thing, if we draw a trend line kind of there, we can see that, we had a huge move lower, wiped out a bunch of people. Then we had this, I kind of got cut out there, but anyways, okay, so you can see kind of this movement in bonds, and then it kind of broke out of the channel. So same thing happened in the 10-year as the 30-year. Anyways, okay, so this is great for financials because, as you know, the banks, they make the spread, right? So they'll borrow at cheap interest rates. They'll borrow, and then they can then, if the interest rates go higher, then they can just charge higher interest rates on their loans. So it's good for those guys if interest rates go up. That's why you see this kind of move in financials. And there's this whole argument about whether inflation or deflation. People who say deflation are saying tech will cause deflation. Inflation, well, there's lots of arguments. You could say that the government is printing money, X, Y, and Z. There's a supply shortage and all that stuff. It's all, it's all, in my opinion, transitory. I think the Fed is going to let inflation run. So, inflation could come, but I think that the amount of disruption that we're seeing in tech, how deflationary that has been, and the fact that the banking sector, really, it's not cleaned up since the 2008 crisis. There's still a lot of toxic assets on their balance sheets. They're not lending, they're just, they're leveraging their money and they're buying these real estate prices, and real estate prices are going up, and they're just, doing buyouts and things like that. But they're not lending to regular folk who want to start a business because, the interest rates are at 1%, 2%. So really, there's no money in them. But theoretically, if the interest rates go up, then maybe the banks will be incentivized to lend again. But a lot of them see, because the economy is not doing so hot, a lot of them see lending to regular folk, I guess just people in society, a huge risk, because if it's an unsecured loan and the person defaults, well, okay, you declare bankruptcy. And, that's a whole process, but essentially it's unsecured. So they have no collateral to come and claim. Anyways, you can kind of see here. So since the 2008 crisis, XLF, which is the financial ETF, it's been flat. It hasn't gone anywhere for all this time. And then we can kind of see that recently it's broken out, and it's doing pretty good. And it's respecting these trend lines. This is a bull market for financials. Like, I don't see how this doesn't keep going up. The next level is 45, and I like to trade options. So let's look at the vol. Let's look at these guys. Okay, so let's go to XLF options here. Okay, I got disconnected again. Okay, so we can kind of see here. Okay, let's say August. So let's say the August calls. We have an implied volatility of 20%, which is pretty good. So these 38 okay, let's do like $37 calls. You know, they're going for 131-ish, let's say. And if your target is 46, now who knows when it'll reach 46. But even if you did like, oh, I don't know. Let's say you did 2022, okay? So 2022, and you bought $1, these guys for $1, and you just ride it out. From here, it's like a 30% move, and then you're there. I mean, that's the target. So whether it's going to get there in 267 days, who knows? But it is a bull market in financials. So options are actually reasonably priced there. Okay. Let's go to the S&P 500. Okay. So this, we can kind of see it's within this channel. It's within its bullish channel. Tonight, it's kind of selling off a little bit. But you can kind of see it's reached a really important fib extension. We can kind of see here if we kind of draw this. You know, it's reached its fib extension. So here it's reached here and it's consolidating. It's moving a little higher above it. But to me, this is not a big move above the fib extension. In my opinion, it's still going sideways. It is still consolidating. If we can kind of get above this trend line, then we can say, hey, like, you know, S&P, you know, on its way to okay, I keep getting disconnected. I'm not sure what's going on. Anyway, so the level that I was mentioning was around 5,300. It's unclear when we'll get there. It could be a number of years, but anyways, yeah, so I will try to kind of fix my system here. But thanks for tuning in, and I hopefully will see you guys next time. Cheers. Have a good night.